Welcome to today's Canary report. Markets are asterisk mixed with underlying caution as investors grapple with tech rotation following the AI Mania article that sparked headlines across the board. The VIX dropped sharply overnight, but gold is doing what gold does, flying to safety when uncertainty lurks. Let's see what our canaries are telling us. Speculators are asterisk selectively aggressive today, and it shows up in fascinating ways. ARKK jumped to 3% as investors poured back into Speculative Tech after the AI Hardware Mania article. Readers went straight for the leveraged angle. Meanwhile, SPHB crushed 3.45%, showing capital is fleeing the broader speculative small-cap universe toward more focused bets. XBI's 2.22% gain tells me biotech speculation lives, but XLY only managing +0. 57% suggests consumer discretionary can't carry the narrative alone. Asterisks, why the split? The AI hardware article created a clear trade hierarchy. First movers got priced in, second wave speculative tech is flowing into ARKK and similar vehicles. While traditional SPACs are being treated as old news, capital rotation is real here. Investors aren't running away from risk entirely, they're repositioning it. Credit is asterisk holding steady with mild compression across the board. High down 0.05%, HYG 0.18%, and HYGW 0.41% all moved slightly lower. Nothing alarming, but nothing expansive either. The yield environment isn't driving major flows today. Credit is more of a background player than a headline driver. Asterisk. What this means, credit markets are in watch mode. No flight to quality here yet, which pairs with that VIX drop to suggest investors aren't panicking about the near-term outlook. If anything, the slight compression hints at mild risk appetite preservation, rather than outright fear transfer. Here's where it gets interesting. The asterisk VIP 4%, which means UVXY, VIXY, and VXX, all gained because they're long volatility instruments that capture the upside of the index falling. UVXY plus 0.52%, VIXY 0.76%, VXX plus 0.77%. Asterisk the paradox. Volatility expectations are down, VIX lower, but fear ETFs are up. Volatility products higher. This tells me investors think short-term moves will be smaller, but they're still hedging for directional moves. Especially after that AI Mania article created fresh headline risk. It's the kind of mixed signal you get when markets anticipate a calm before rather than immediate chaos. The real economy is showing asterisk sector divergence, which I read as selective strength amid broader pressure. SMH crashed 3.29%, semiconductor hardware under heavy rotation after being the AI play of late, but IWM gained plus 0.47%, RSP, Canary plus 0.43%, meaning small caps are holding their own while mid-caps lag. Asterisk connecting to news. The Forget the AI Chipmakers article is the clearest signal here. Capital is moving from the actual chipmakers, SMH, toward the infrastructure plays, data centers, utilities, even regional banks that have exposure through supply chains. KRE's gain reflects this broader industrial rotation. The real economy isn't sputtering, it's just being repurposed. Safety is asterisk split between traditional and alternative hedges. GLD jumped plus 141%. Gold doing gold when headlines spike, even as VIX falls. Classic gold behavior. TLT held flat at 0.1%. Bond gained a modest plus 0.6%, but XLP only plus 0.63%. Why the split? Asterisk. Gold is priced for geopolitical and monetary uncertainty. The AI Mania article touched on both SpaceX's potential OpenAI Anthropic index inclusion, monetary relevance, and structural inflation from tariffs, geopolitical. Traditional bonds aren't seeing flight to safety pressure yet, which means investors are hedging with gold rather than duration. That's a more targeted safety trade, less broad-based panic, more surgical positioning. We're in asterisk sector rotation territory, not regime change. The AI hardware article created clear capital paths, away from overpriced first movers, SMH, towards speculative tech renaissance, and infrastructure, data center plays. Gold's jump is a headline reflex, but the VIX drop shows near-term volatility expectations remain contained. Credit stability and selective real economy strength suggest investors aren't fleeing risk entirely. They're just reallocating it with surgical precision. The key watch: if SMH continues to bleed while ARKK rebounds, we've confirmed full rotation from AI hardware to speculative tech. If gold keeps climbing despite VIX compression, geopolitical or monetary uncertainty is the underlying theme rather than pure tech news. That's your Canary report for today. Markets are selectively aggressive with a safety net in place. Gold ready, credit stable, volatility expectations contained. The AI story is still evolving, but capital has found its next path. Speculative tech over hardware, gold over bonds, infrastructure over chipmakers. Stay vigilant on that SPHB weakness. It's the Canary warning of broader small-cap rotation ahead. We'll see you tomorrow.